In the last video we covered the bull flag, and today in this video we flip it upside down, and honestly bear flags might be even more powerful because when market is just crashing, it's so easy guys to take this pattern because yeah, markets tend to fall faster than they rise, and so bear flags can produce faster and more aggressive moves, and that's what we like to trade. And by the end of this video you'll know how to short bear flags with confidence. So what is it, a bear flag? It is just a mirror of the bull flag, okay? Strong move down, so this is the pole, if you remember, the pole, the flag pole, then followed by a slight upward pullback, this is the flag, and then when we are breaking it to the downside, this is a flag, bam, we are just continue to going down to the downside and keeping to trend lower. The psychology about this pattern is that we have a sharp drop, aggressive selling. This pullback is just a short covering and weak buyers trying to catch a bottom, and sellers are just reloading. They are reloading massively in this flag. And this flag should slope slightly upward, okay? Slightly upward. If it rallies back more than 50% of the pole, so of the pole right there, if it's crossing more than 50% of the pole, the pattern weakens. So how to identify a quality bear flag, guys? It's so simple. Let's take a look at this Nasdaq. Is the Nasdaq, and look how we went to the downside and how we fall, and we fell off a cliff. Okay, so if we are going on this 1 minute time frame chart, let's see if we're gonna find some bear flag. We want that pole should be sharp and impulsive, and I remember I took at the open a bear flag. Okay, so a pole sharp and impulsive, we have right there a pole sharp and impulsive, and then volume high in the pole, so over there we have a high volume, and declining during the flag. And look at this flag, we have the flag over there, and the volume are getting weaker right there. It's not an optimal bear flag because the correction was a bit too high, but at least it worked anyway, because normally the flag should be contained and not volatile or erratic. Okay, so and this flag was a bit volatile, and at the end we broke it to the downside, and over there on this candle I took a short with a huge size and put my stop above my 1 minute thin lines, and I hold it until the previous low, so all the long, and right there I just hit my TP. Let's see if we're gonna find another bear flag, especially in this trend. It's not an ideal, but we have this one, for example, bam, and once when we are break it, boom, we broke it to the downside, we retest it 1 time, 2 times, and then we are falling off to the downside, but it's not an optimal one. Let's see if there's another. Yeah, wonderful one in this global session. Look. Flag pole, bear flag, we broke it, bam, we continue, we keep going, poo. Then huge flag pole right there, nice bear flag right there, we broke it to the downside, and bam, we keep going to going lower. Again, massive flag pole, nice bear flag, we break it to the downside, and bam, we are keeping going to go lower. Nice, very nice bear flag right there. So same, if you want an aggressive entry, short at the top of the flag, so right there, and or maybe even inside the canal before that we are breaking it. Okay, if you are seeing for example a lot of sellers inside of this bear flag, or seeing that the cumulative volume delta is getting lower, or in other confirmations, you can attempt. Remind guys that it's an aggressive entry, and if you want to be more conservative, just wait for this breakdown right there, or or next one right there. Okay, if you are waiting for this breakdown, at least you're waiting a big confirmation below the flag lower boundary, and you would have more probabilities to win your trade. Stop loss, of course, just above the flag, and the target, as usual, you measure this the flagpole, and you remove it on the breakdown, so where we just broke this bear flag. As I said to you, I don't like it to this theoretical target. I prefer to adapt of the market, okay, and be flexible on the target. So usually I like to put my targets on the previous low, because it's a support where the market just reacted, and look, for example, we just hit the previous low and bounce on it. And that's why I don't want to take any risk, and often I'm just getting out of the previous low, and then if I want to hold a runner, put break-even stop, and then let my other contracts and my other size running. So, and why this market drops fast? Because fear is stronger than greed, and that's why often these bear flag are working even better than the bull flag. And short squeezes right there, so which is shaping the bear flag, are just creating fuel for the next leg down. And institutional players use bear flag rallies to add to short positions, and the flag is their entry window, and that's where institutionals are getting their entry. And one of the common mistakes is trying to buy the dip, okay, trying to buy the dip right there. Inside a bear flag, you're just fighting the trend. So that's a common mistake from the beginner trader, so you need to be careful on it. And another common mistake is placing stops too tight, okay, too tight. So over there, the trend, when the trend is powerful, it's working every time. But when the trend is not very powerful, if you just place your stop too tight, for example right there, and not above this bear flag, you don't let this pattern develop himself, okay? So that's why you need to put a stop correctly and above the bear flag. And one of the last mistake is forgetting to check this volume, okay? If volume increases during the rally, buyers might actually be stepping it. So right there you can see volume is decreasing, right there volume is decreasing too, so this is really nice. Volume are increasing right there during this dump, so that's not good. And right there, boom, volume are weak too right there, so that this is fine. That is for this bull flag and bear flag. If you just master these two setups, these two patterns alone, and you'll be ahead of 80% of traders, especially when the market is gonna be directional. All right, boom. Next video, I'm gonna talk about the bull pennants. So make sure to subscribe at this YouTube channel, because a lot of educational contents are going to post on this YouTube channel, and some later some entertainment content too. Boom! If you liked it, don't forget to hit the thumbs up. We'll see each other in the next one, or in trading live stream every day from Monday to Friday on the Phidias Profim YouTube channel. See you soon in the next one. Bye bye bye.
Yo, his name is Florian. He's the NASDAQ hustler. Every day he's grinding, making all them numbers cluster. He's a day trader, living life as a thrill seeker. Analyzing charts, he's the Wall Street sneaker. 9 to 5 ain't his game, it's the stock market flow. Tickers on his mind, watching those numbers grow. Buy low, sell high, that's the name of